Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets on Wednesday the 19th of August. The European trading session has started very poorly again. Basically what we're seeing is just further moves on this China story. Chinese equity markets are sharply lower overnight, following on from a 6% decline we saw on Tuesday. Again, we've fallen over 3% today, so that sort of has filtered through into the Asian trading session, which pulled the Nikkei lower, and now that's pulled all the risk, basically impacted on risk sentiment, pulling FTSE lower sharply down, 1.1% of FTSE, 1.4% on DAX. So these European equity markets are really under pressure again, and it seems to be that China is the driver. Germany has a vote on the Greek bailout today, the third Greek bailout. Eurozone parliaments have pretty much successively voted through the deal, but Germany gets its chance today. There's no expectation of any sort of real protest. They ran a mock vote on in the German parliament as a practice run, and there was just a little bit of dissension, but nothing too significant. So it's expected to go through quite smoothly. So that's not really the focus that we've got for today, but more reacting to this China story. But then moving towards also the US data this afternoon, the inflation data, also the Fed minutes this evening. They are the key aspect of today's trading. What is the Fed going to show in its meeting minutes for the last FOMC meeting? Will it show, for example, any sort of hawkish hints? We've got the next Fed meeting is the September meeting, and that is the point at which a lot of the market is expecting the Fed to move on rates. So very interesting to see what happens. But this take it potentially with a little bit of caution, because this move has also come before all this fallout from China, the devaluation, and the further strengthening of the dollar, and the potential for deflation importing from China. So that is potentially going to be an aspect to look out for, but certainly the Fed meeting minutes could well show a bit of a hawkish lean today, so the market will be looking out for that. In terms of Forex trading, in front of this inflation data and the Fed meeting minutes, the dollar is actually weaker. You've had a rebound on the euro. The euro sold off quite sharply yesterday, but it's actually rebounded quite nicely today, and also sterling is rebounding as well after just sort of drifting into the close yesterday. But there's a lot of dollar across the forex majors today. Pretty much the dollar is down. Also dollar is down against gold and silver, but interestingly also flat against the oil price. Just a couple of charts here. First of all, the dollar, which is lower. This is on the dollar index. This is the oil price, which has been in this big downtrend, but it's just the last few days it's been stabilising a little bit and showing potential signs, and I say potential with a big sort of caveat, potential signs of possible bottoming. But look at the copper price. Wow, it just continues to sharply move into multi-year lows, and that is very weak indeed, and that certainly is one of the reasons why we're seeing such a decline on the FTSE and these equity markets. So in terms of the data, let me just show you the expectations. This is the year-on-year inflation data for the CPI in the States. 0.1% last month, actually expected to just come up slightly to 0.2 this month. But more importantly, I think, is the core data. The core number is expected to stay at 1.8%, but if that starts to tick higher, then that could give the Fed a bit of a nudge and more of an excuse to move on rates. So the markets will be certainly looking at the core data for that CPI. Then we've got the inventories for oil stocks in the States. 7% negative was the inventory last month, expected to be negative 2.0 this month. So could be very slightly supportive for oil if that is the case. But generally speaking, the focus will be on inflation and also the Fed minutes. So that takes me to my chart of the day, which today is the DAX. Now, what we've seen, I just wanted to talk a bit more generally about the DAX today, because over the last few months we've seen the DAX basically trading sideways. Just move those fib levels. You can see that it's basically not really gone anywhere, but it's now trading towards the bottom of the range. And the reason I've got these fib levels are because every time it gets towards the 50% level, it resistance. Look at those resistance levels up there, and also the support at the 50% level recently. So 10,652 is the key low on this DAX. It's just dipped below that 10,800 level today, but I would argue that we're now getting to into the realms at which the buyers are going to start to think about this again. Is the DAX going to break down, or is it going to start to form support again? That is the big question that the traders will be asking themselves. All the momentum indicators are interesting. You've got the stochastics, oversold, yes, not looking positive certainly, and fairly negative actually, and not really showing any real signs of a recovery yet. RSI, back to a level, as you see on here, back to a level at which the buying pressure tends to return through this whole sort of ranging process. So the fact that we're now back into this sort of support band between 10,650 and 10,800 is interesting now on the DAX, so we might start to see a bit of support coming through. I'm not saying it's going to happen, because to preempt support before it happens is a bit of a risky game, and certainly this is the hourly chart with another set of fib levels. Actually, the hourly chart suggests that potentially we're coming back towards the lows, certainly, but the momentum indicators on this hourly chart are pretty negative still. But as I said, on the daily chart, on a sort of medium-term basis, this is around about the level at which the buying pressure has tended to come back in the last few months on the DAX. So just keep that in mind if you're trading sort of more medium-term on these charts. But very interesting move that we've seen. Now, in terms of the candlesticks, zoom in here because we've had pretty much negative candlesticks all the way. You did have a doji candlestick yesterday, but, and obviously the move down today is a negative. There is a gap open. That gap sort of comes in around the 10,900 area. So there is scope for a bit of an unwinding rebound if that gap is to be filled. But I do tend to see on DAX that the gaps don't tend to be filled particularly well on the DAX, so you do tend to find that the DAX doesn't really conform to normal gap trading rules. Anyway, so I wish you good luck in your trading on DAX today, and I will speak to you